Welcome back to the Moneycontrol live stream. You're watching Markets with Santo and CJ. Well, what do we have on our hands? A recovery from the bulls. Finally, bulls are showing some appetite that they don't want the bears to take control of the market. If you look at the Nifty 50 and Sensex, they are well off the day's low.
False dawn, I would say.
Oh,
CJ.
come on, Santo. Come on. Rejoice a little bit. Rejoice a little bit. I mean, the Nifty and Sensex were down and out earlier in the morning. But over the past 2 hours, we've seen a decent recovery. I mean, decent, spectacular recovery from the day's low. And they're currently...
Decent or spectacular?
Come on, CJ. Spectacular, actually. If you look at it right now, they're both trading at the day's high. Nifty and Sensex, both the mid-cap and the small-cap index have also recovered all of their losses during the session, whereas the India VIX, the fear gauge, is down about 3%, suggesting that there is some bit of short covering happening ahead of the weekly option expiry of the Nifty later in the day. If you look at the gainers, is RIL, is the heavyweights on the index that are doing the lifting at this point of time. RIL, Infosys, ITC are taking charge for the bulls, whereas the banks have been the one that have been a little bit of a disappointment, along with metal companies who are the biggest laggard on the sectoral side on the NSE, Santo.
Well, CJ, if you see the broader trend, I think market is still slowly grinding lower. There is fatigue because of sustained selling from foreign institutional investors. That's something that has not changed. And if you see the buying by domestics also has remained within a certain range, right? So I think this is a market which will continue to drift lower. We are already seeing some kind of a time correction because the market is unable to sustain at higher levels, barring the odd pullback that you see after 3 or 4 continuous days of decline. Now we've seen 4 days of decline, some bit of pullback today, but after that again, the market slowly starts slipping. So this is again a market, I think it's really tiring out the bulls, and at some point I guess the selling could accelerate if prices continue to remain in this narrow range.
Santo, the points that you have made there, I can just totally flip them out and say that it's also tiring out the bears. And the fact that we have not fallen off the cliff could actually trigger a up move on the upside that could take all the bears by surprise, right? Well, it holds either way.
Yeah, but CJ, just look at the indications from the bond market. Yesterday, immediately after the RBI announcement, you saw a pullback there in bond prices, but again they failed to sustain. And today that same is the case. The yields clearly indicate that market is expecting more rate hikes.
That is given by now,
and
Santo,
that's a dampener for both consumer sentiment as well as companies in terms of their operating margins. So Santo, you're going to see big earnings impact.
Santo,
don't say I didn't warn you.
No. I totally take your point, but the point is that there is what you call a neutral rate in the economy, right? This is a rate at which the economy is neither hurt nor aided by central bank rates or interest rates. It just ticks along at the rate that it's naturally supposed to grow, right? And we are far off that rate at this point of time. If you look at what economists are suggesting, that interest rate or repo rate would be in the range of about 6 to 6.5%. Right now, we are sitting at 4.9. So even if the RBI were to raise rates over the next, a year, maybe there are expectations of 100 to 150 basis points of rate hikes. Even if you take that into account, I think the market has more or less discounted that. It will not wait for the RBI to come and announce the rate hikes to discount those rate hikes in advance. I think the market is already expecting interest rates to go towards that 6 to 6.5%. And I feel that a lot of the negativity out there is largely priced in. The only caveat I would add is what happens to oil prices. Whether oil prices surprise on the upside, that is the only thing that I can right now feel that could take the bulls down. But otherwise, there are just not enough triggers on the downside or on the upside at this point of time. Then again, we don't know what the future holds.
So let's take a look at the stocks that were in the limelight today, starting with Gland Pharma. Huge correction in the stock over the last 6 to 8 months. It's down by about 30%, and probably that is what now makes the stock attractive according to IIFL Securities. The brokerage says that after the big correction, clearly market has tempered its expectations from the big scale up in the contract biologics business. So that expectations has clearly come down, as seen from the sharp erosion in stock price. Besides, the company will now focus on the injectables business, which faces less price erosion, compared to oral solids. So these are the two things which are in favor of the company. Besides, there's been consistency in both top line and bottom line growth over the last 3 years. 24% growth, compounded growth in top line, 38% growth in earnings. So, according to IIFL, this is a good stock to bet in the pharma space, and the brokerage has also upgraded its rating on the stock from hold to buy.
Well, Santo, your argument sounds like, okay, the boxer may not knock me out, but it will just give me a mild concussion, and that is therefore I should buy the stock. I just feel that, the stock has been underperforming for quite a few reasons. One, the chief among them has been the rich valuations of the company. Now remember, during the time when rest of the pharma pack was going through correction, Gland Pharma actually went through a period of outperformance because there was a lot of negative sentiment attached to its IPO when the IPO came out, and therefore it had a lot of covering up to do to reach its fair value. Then it overshot that fair value. If you look at the valuation at this point of time, even after the correction that you mentioned, it's still trading at about 31 times 1 year forward earnings, which is at a significant premium to peers like Sun Pharma, Cipla, Dr. Reddy's, who are trading in the range of about 23 to 24 and 25 times 1 year forward earnings. So clearly, the market has not discounted all of the negatives yet, or even if it has, there is just not enough room for upside on the stock, in my opinion. Overall, if you look at it from the fundamental side of the business, the gross and the operating margins are expected to continue to remain in pressure. In the March quarter, we saw gross and operating margins decline significantly on a year-on-year basis, and there is an indication that that will continue in the coming quarters as well, because costs remain quite high in terms of raw material prices for the company. Along with that, one of the key growth boosters for the company was supposed to be its entry into the Chinese market, and that has got deferred because at this point of time the COVID lockdowns in China have deferred or delayed the inspections or physical site inspections that were supposed to be taken by the regulator there, and that has not happened, and that clearly is a dampener for growth in my point of view, Santo.
Well, short point, IIFL expects roughly 19% compounded growth over the next 3 years, largely driven by both volume growth as well as launch of new products. It's already done well with the products it has launched so far, and IIFL expects the trend to continue.
Well, Santo, I just feel that there are better bets out there in the pharma space than Gland Pharma at this point of time. But one stock where Santo feels that there is a room for debate, but I do not see any room for debate, is Indian Energy Exchange. I remember, Santo, you recently pointed out that there are issues related to lack of long duration contracts and all that, and you said that that is one of the reasons why you will stay bearish on the stock. Well, now that is taken away. The company recently received approval from the electricity regulator that it can bring long duration contracts on a weekly, monthly and quarterly basis on its exchanges. This is going to be a big fillip for volumes on the energy exchange and will probably boost earnings very significantly going ahead. If you look at overall volume growth, the management had indicated that they will be able to launch, once they are able to launch these contracts, the longer dated contracts on their exchanges, they expect to grow volumes at a tick of 20% on an annualized basis for the next 5 years. Not 1 year, not 2 years, but 5 years going ahead. So clearly, given the overall monopolistic nature of the business, given the high margins that IEX makes, this is, at this point of time, after the correction of this year, this is a stock that is really, really attractive to me, and that's why I'll be going all in into it.
Well, yes, but one point to note here, CJ, just looking at the price chart, despite this announcement, the reaction has been slightly muted, Given that the kind of correction that the stock has seen, probably you should have seen a big surge, all the shorts coming in to cover the positions, but that doesn't really seem to be the case. There are other issues as well. One is the cap on pricing which CERC has proposed, the transaction fee that exchanges like IEX levy on their on the participants there. That is still a bit of an overhang. Market is awaiting clarity on that. In addition, you have competition coming from PTC India. And lastly, there is also this proposal to kind of pool bids across all exchanges, that again is something that is a big overhang according to Bernstein, which has an underperformer rating on the stock and a price target of 148.
Well, Santo, those arguments might be valid in the near term, but I am trying to look at the stock just beyond, beyond 3 months, next 3 months or next 6 months. If you look at the performance of the past 1.5 to 2 years, it's been one of the stories of this bull market, and I feel that the story after the correction, after the froth been taken out of it, after what you call the weaker hands have been taken out of the stock, I feel there is good opportunity here for longer term investors to get in.
Blue Dart is one of the big gainers over the last couple of years. You know, the stock has now rallied almost 3.5 times from the lows it had made during March 2020. Wow. Consistent growth story here again. A couple of years back, the company went in for some major structural changes. One of the things it done was it right-sized its staff, and the second thing is it also kind of optimized its road routes, and all those are slowly kind of beginning to show results.
Okay.
According to Edelweiss, now Blue Dart is trying to get a bigger share of the e-commerce market from where it had been, you know, it had not entered that market in a big way, mainly because it was not profitable. But now the company has said that it will try and take exposure, but only pursue wherever there is profitable growth. It's pretty clear on that. 2022 was a blowout year for Blue Dart, huge jump in earnings there, and Edelweiss feels that the company is likely to maintain that momentum going forward. So this, according to me, CJ, is a stock to watch out for.
Well, Santo, your comment about them waiting for profitability or opportunities where there's profitability reminds me of Maruti Suzuki, a few months ago, wherein Maruti Suzuki was like, we will only enter the EV space only when it's profitable. And I feel that market at that point of time said, well, if you keep on waiting, everybody else will just run away with the opportunity and you will just keep on waiting for profits to arrive. I think for Blue Dart also it seems like a similar situation, because here is a competitor called Delivery, which is taking that opportunity and grabbing that opportunity with not only with both hands but feet and belly as well. And they are making the money at this point of time, at least not reflecting on the bottom line, but at least on the operating basis, they are very soon going to break even. So for me, Delivery, now is the premium bet to make on the logistics space. Maybe if it was not there, Blue Dart would have been definitely an obvious candidate. But because Delivery is now listed, and given the fact that whereas Blue Dart is expected to grow high teens, maybe 13-14% in revenue CAGR, Delivery is expected to grow anywhere between 30 to 35% over the next 5 years. Clearly, there are competitive advantages that Delivery has when it comes to e-commerce, and now it is also trying to get into the territory that Blue Dart really occupies. So for me, Delivery is a better bet than Blue Dart in this market. While Blue Dart, there is no suggestion that it's not a good stock. Definitely it's a good stock. It will keep on giving you steady returns and steady earnings growth. But if you want to make great returns in this market, then probably not the counter for me. Well, one stock where I feel, I've already said it in the past, and it's been already showing in the market, where I feel there is good return potential as well as earnings, is Tanla Platforms. When I last mentioned the stock, it was probably taking a pounding from investors given the general correction that we are seeing in the market. But over the past 1 month, the stock has risen about 1 to 2%, whereas the broader market has declined almost 2 to 3% in that same period. Clearly, there has been outperformance there. And today, the company came out with a news that it has entered into a partnership with Core.ai, basically a conversational AI platform to basically enhance the technology that they have on their communications platform. Now, if you look at the global conversational AI market, it is growing at a handsome tick of 21% annualized growth over in the past 4 years, and expected to carry on that growth in the next 6 years as well. In India itself, this market segment is growing anywhere between 25% or 30% on an annualized basis. So clearly a very high growth area, and now Tanla Platforms has entered into partnership with one of the leaders in this space. So clear for me, the stock remains a very good play on the CPaaS market, or what you call it, communication platform as a service market out there. Tanla has clients like Vodafone Idea on its book. It basically does the enterprise communication for it, and one stock that has made shitloads of money, Santo, pardon my language, but there is only one way to explain a stock which has gone from 80 bucks almost to more than 2,000 rupees in the space of what, 2.5 years probably?
Yes, 2.5 years. But I think, CJ, some of it also has to do with the fact that the float suddenly went missing from the company. Otherwise,
okay,
from the stock. Otherwise, I can't see how stocks can rally that much. If you see the period when
they
it just
demand.
vertically took off, there were just no shares available in the market. Somehow, well, that said, let's quickly take a look at how the market is doing at this point. It yes, looks set to close in the black today.
Definitely.
That will make CJ a very happy man.
We are at the day's high, Santo. Look at the Nifty 50, about 128 points higher at this point of time. We started the day with a 90 to 100 points cut at the beginning. So clearly a 200-point recovery on the index. And not only that, the concern point that you were talking about, small cap and mid cap, they also have made a handsome recovery. The Nifty Mid Cap 100 Index is up about 0.5 and the small cap 100 is up about 0.2.
Well, and with that we go on to the last stock on our watch list, this NMDC. CJ, till about a month back, the story looked very, very good.
Yeah.
The company had reported some very strong numbers for the fourth quarter.
True.
There was talk about the steel plant, being demerged and everything. But the government's decision to levy an export duty has completely changed the picture and been very hard on companies like NMDC. Now, NMDC has already taken 2 price cuts over the last fortnight, according to Kotak Securities. And this main reason is that the exports have become very unviable because the duty on pellets and fines have been among the highest. So there is added supply in the local market, because of which NMDC is having to cut prices. Besides that, Kotak Securities also says that the steel plant commissioning is going to take a little longer. Now, one of the triggers for the stock was supposed to be the demerger of the steel plant, but according to Kotak Securities, Kotak Institutional Equities, I beg your pardon, the company is taking some time to stabilize the operations of the steel plant, and hence the demerger could be further delayed. Kotak has downgraded the stock and has a sell rating on the stock with a price target of 110 rupees.
Well, Santo, the bearishness that Kotak has is clearly, I mean, it's expected given the sort of stock performance and the price cuts that we have seen. But I have a feeling that, after 26-30% of price cuts in the domestic market, probably, I don't know, prices might have bottomed out for the near term, because let's not forget that the demand supply dynamics still remain very much in the favor of the suppliers at this point of time. Plus, if you look at globally, Chinese iron ore prices have been rising. I mean, they're sitting at almost 1 month, 2 month high because of the expectation of demand recovery there and supply being where it has been over the past 6 to 7 months. So if international prices do become more vibrant going ahead, I feel there is a possibility that it might be able to offset some of the losses that NMDC has seen on the domestic side of the economy, of the pricing, and therefore probably the negativity that we have seen in the stock might have priced in the near-term headwinds, and it could end up creating an opportunity for longer-term investors who are trying to get into that entire capex theme that we have been talking about repeatedly on the show. So for me, probably not the time to go bearish on the stock, and probably wait and watch and steadily accumulate the stock on the dips.
See, this is one market, because stocks have corrected 30 to 40%. Many people feel that, valuations are attractive. Trust me, bear markets prices can go really, really down.
True. It is. But you can't always keep on waiting on the sidelines, right? You have to take action somewhere. Whatever is to your appetite, whatever is suitable to your appetite. If 30% is okay for you, and you can still take a 20% cut, maybe, good luck to you.
Well, so what do we have on the horizon, CJ?
Well, Santo, you have been, talking about how fund flows could be moderating and, whatnot, retail investor appetite might be going down. Well, but the latest data that came out from Association of Mutual Funds of India on equity inflows into the mutual fund industry, that showed a robust risk appetite in my point of view, Santo. If you look at the equity inflows to mutual funds, they rose about 13% on a month-on-month basis in May. Along with that, if you look at some of the categories of funds that inflows went into, these are large cap, mid cap, and flexi cap. Flexi cap, of course, being the more dominant, clearly showing that investors are also being very prudent and very conservative, not conservative but very prudent in their choice in terms of how they want to play the market at this point of time. One thing that stood out for me is that sectoral or thematic funds, Santo, they saw more than 2,000 crores of monthly inflows in May, which goes to show that risk appetite is still quite strong among retail investors out there. It's not been waning, or else you would have seen this segment of the equity mutual fund schemes, which is usually associated with higher risk appetite, take a hit on the inflow side. So that has clearly not come through.
Well, I think I would be a little more worried in that case, because this is typically, I think, the final stages of the bull market where it keeps trying to pull in more people and before it starts going downhill, CJ.
I think this is just retail investors being smart and utilizing the correction to take position in the market, Santo.
We'll see that in another couple of months from now. Well, so CJ, the ECB rate decision is something that the market is closely watching out for.
Definitely, Santo. On the horizon, we have the ECB's rate setting decision later today. Their monetary policy committee or equivalent of monetary policy committee will meet later in the evening, and it is expected expected that there will be some sort of commentary, if not action, on rate hikes, as well as the withdrawal of the quantitative easing that they have been doing since the start of the pandemic. Apart from that, of course, tomorrow we have two critical data points coming out from China as well as US. China's May inflation data will come out along with US May inflation data, and China's data will be important to gauge how demand is recovering. Whereas on the US side, basically that data is all that tells you, how the rate hike path will be. Expectation is that the data would be quite strong in US, so that will probably not settle very well with the bulls out there. But those are the two data points that investors will track. Along with that, at home, the industrial production data will come out for the month of April. So, of course, given that Q1 GDP data was quite decent in terms of year-on-year growth, industrial production data will also be quite keenly watched out, as we'll want to gauge how the economic momentum is, given that prices were quite high in both in the month of April and May.
Well, with that, it's a wrap on this edition of Markets with Santo and CJ. Thank you for watching, and do share your feedback in the comment section below.
And do follow us on the social media links at the bottom of your screen, and stay tuned to moneycontrol.com and the Moneycontrol app for rest of your financial news. We will catch you live again at 9 a.m. tomorrow morning.